Tim, let's start with Arrium, formerly known as OneSteel. This is now an iron ore play. Now, we saw the iron ore price hit a fresh 2.5-year low overnight. Did they give us much insight in terms of what we can expect going forward?
Well, the comments from Arrium in terms of iron ore were quite positive, as opposed to some comments we saw from BlueScope yesterday. They said that fundamentally iron ore remains quite positive. They're also quite positive on the outlook for Chinese demand, and this was going to be supportive of iron ore prices moving forward. Now, we did see a big drop in their net profit for the full year. That was a lot to do with restructuring and write-downs on their steel businesses. Their underlying earnings came in at $195 million, which was in line with guidance. It was their mining and mining consumables segments which performed strongly. They contributed around $300 and $135 million in earnings respectively, and it was their steel and recycling business which was weak. It recorded an EBITDA loss of around $19 million, but they are looking to certainly increase their iron ore production. That's expected to double to 11 million tonnes per annum next year. So certainly iron ore particularly important for Arrium moving forward. And we did see iron ore prices fall below $110 last night, hitting new lows. And certainly there's a few things going on here in terms of a falling iron ore price. Certainly seasonal weakness in China and in steel production in China, but also just some difficulties, low confidence in terms of trade conditions at the moment. Certainly slowing China, as well as a patchy US recovery and continued concerns in Europe, all weighing heavily on commodities and iron ore in particular. But further falls in the iron ore price, most at risk there will be those companies that have higher marginal costs of production, which are most of the Chinese domestic producers of iron ore, as well as companies that have undeveloped iron ore projects. If we look at the Australian big three iron ore producers, their marginal cost, their cash costs of production range from around $34 through to $54, with Rio being the cheapest and Fortescue up around that $50 mark. But they're still making significant margins on that. We've seen Fortescue's share price has suffered recently. It's particularly sensitive because of the fact that it uses its cash for funding its expansion plans at the moment. But if you're looking at iron ore leverage, Rio does appear to be quite attractive at the moment. It does have the lowest cost of production, around $34 a tonne. So Arrium, the shares have shot up today, certainly, but if you're looking at this, it's still got that steel production business which has been dragging on results.
Yeah, Oil Search today, I can see it's down around 0.8%. The remainder of the energy space in positive territory. We saw them release their first half results. Investors not loving that one. What are the details?
Well, it's a first half profit result. It fell around 6% on the previous corresponding period to $107 million, down from 114. Though on the positive side, we did see an increase in revenues. They were up around 7% as production continues to be quite strong and oil prices quite supportive there. There was some high exploration costs which weighed on the profit results. The second half production likely to be affected by a shutdown at one of their marine terminals in Papua New Guinea. This is expected to resume production very soon, though they did say that their full year guidance for production will remain unchanged. Now, Oil Search do operate those oil fields in the PNG highlands. Now, these are quite old now, around 20 years, and in a natural state of decline. So one of the big drivers moving forward for Oil Search will be its large stake in that $15 billion PNG LNG project with ExxonMobil. Now, the political outlook in PNG had been a little uncertain recently, but the outcome of the election in June has been a positive for stocks like Oil Search. It will provide a bit more certainty moving forward. And this big LNG project is expected to come online in 2014, so we should see a significant increase in earnings for Oil Search moving forward from 2014. At the moment, this project remains to be on budget. It's coming. It seems to be on time at the moment, ExxonMobil has said. Now, Oil Search is particularly sensitive to oil price, as expected. Just to illustrate that, if you have a look at a 2-year graph for Oil Search, you can see the black line's the stock price and the blue line there is the price of oil. But today, investors sort of just mulling over the results. Probably this result wasn't going to be a big market mover in terms of share price. The stock just trading a little bit lower.